Hello, everyone, and welcome to Colors of Web3 Fireside Chat. This is our third episode. My name is Lam, your Web3 host. And for those of you who may be new to this Fireside Chat, this is basically the supplementary series. It's also part of my channel. Basically, this series about anything and everything Web3. Sometimes we also talk about the things that's outside of Web3 also, but these episodes tend to be shorter, about 20 minutes and in length. And I usually am accompanied by my co-host, Raigal. And today we'll be talking about real world assets or RWA. So that's the topic for today. So without further ado, Raigal, can you go ahead and maybe give a quick introduction about real world assets to the listener?
Sure. Hi all. So actually, we are going to be talking about real world asset, as Lam told. So first of all, what real world assets are? Okay, real world assets actually are tokenized, tokens like from tangible assets in the real world. So what tangible assets in the real world are? Here, let me share actually the screen with you. So understand real world assets are tokens from tangible assets in the real world. Tangible assets in the real world come from bonds, like state bonds, to actually real estate. So it's a very wide basket of assets that mainly it's anything that can be traded. Here we will include actually credit, debt, any kind of traditional finance asset, as well as like physical things, like as I said, like housing market, etc. Here
Gold and
help.
watches be considered real
Yes,
assets?
exactly, because like you can trade gold, right?
Hmm.
So
Yep.
actually, it's mainly anything you can trade. Here, like there is like some prominent examples: bonds, real estate, commodities. Here it will be like gold; it's a commodity. Art and collectibles, and also equipment, machinery. It's mainly everything. So now it's kind of okay, and real world assets in crypto. Actually, we have like four main groups. One will be like the stablecoins that mainly are like usually USD pegged assets, like Tether, USDC, that are like stable coins that we like back one by one. Like one stable coin, it's like $1, and they are like full collateralized by USDT or other baskets of assets. After, like, there is like the community backed tokens that it could be like gold. It's the most popular. Also tokenized treasury products. Here it's enters like the bonds, any kind of financial product from the traditional finance, and also like credit. So if you issue credit to someone, that it's also like a real world asset. So here actually it's like some analysis. As you can see, like actually how many loans in credit there is right now, like in crypto, like also like US Treasury, like tokenized products that there is, and again like the stable coins. So actually, if it's the same as in the traditional finance, why actually it's beneficial to have it in crypto? Actually, like we could talk a little bit more about like the benefits of the real world assets. I guess Lam can also like see like what are the benefits.
Sure, yeah. So potentials, yeah. So let me quickly touch upon the potential of real world assets real quick. Well, I think the main benefit for that is that by putting things on chain, I think you can reduce the cost, simplify operation. You don't need to rely on a third party intermediary. So some of these just properties of blockchain in general. So I think those are the benefits. But I think people may be wondering what are the potential of real assets, right, in Web3. So I want to share maybe a few of the data points here that I have gathered. I think would make a lot more sense for people here about the potential size of it. So I'm going to cite two examples from the reports that are actually quite reputable. And this is from BCG. They did a report on on-chain asset tokenization. So tokenization of global illiquid assets is estimated to be about 16 trillion business opportunity by 2030, right? And this small circle right here represents the total percent of the world GDP. right? And I think, like I was already said, the different type of what would be considered real world assets right here, right? That could be tokenized. So right now we right about like 1%, I would say, of world GDP, with expectation to get to like 10% or $16 trillion. So this is from BCG. But let's look at another report from this is from 21.co, another research company in Web3. So state of tokenization was released late last year. So right now, value of tokenized asset across public blockchains, 118 billions. I think this doesn't include the stable coins yet, right? And and right now they also said this is an interesting statistics that I find is that right now we have close to 500 million user in crypto already, or 5% of the world population, which is very exciting. Still waiting for that a billion mark someday. And tokenization here, right? So they give a bear case of by 2030 to be 3.5 trillion, and then a bull case of 10 trillion by 2030. So if we do some simple math, right, let's say I think the middle here is going to be like 7.25 from 21.co, and then BCG was saying 16 trillion. So if we take the middle of that, I think to do simple math, that'll probably roughly about 12 trillion, which is still very huge. Just to give you an idea, right now, the total market cap for the entire cryptocurrency, I think, is about 2.5, right here, 2.6 trillion US dollar. Okay, so it's actually, as you can see here, so it's even just real assets alone is going to be 5x the amount of all crypto already in the next 6-7 years if the prediction come correct. Anyway, so I'm gonna hand it back to my co-host Raigal, and she's gonna walk you over a couple of projects that I think would be quite exciting that are doing work in the real asset space.
Yes, but first, actually, you said a very interesting thing. You said illiquid assets, because like I feel like real world assets, like in the real world, usually are very illiquid. They have like very difficult access. For many reasons. For example, real estate, it's difficult to sell, it's difficult to buy, it has like very high costs, it's not fast to do it. Other products, actually, you have to be a person actually, because of bureaucracy, you have to be like a licensed investor,
Yeah,
maybe you in the country, like international, if you want to buy, depending on your country and your location, you are also limited to the assets you can acquire. Actually, here I think like crypto, what it's helping is to make it way more liquid, and we are going to see now a few examples about how we can achieve that. Because like tokenizing that assets and actually allow to break barriers and give access, as Lam was saying, like to way more people, because usually the barriers are for people who don't have a lot of capital. Then like real world assets are kind of limited in the real world to wealthy people. So tokenized, you can buy shares or you can have access, and you are not limited by location, bureaucracy, or other kind of illiquidities.
that's a
So
great point you brought up. Yeah, so more like
mhm,
equitable access, right? So more
yes.
more access opportunity for everyone.
Yes. So now we are going to introduce like a few examples about how that is achieved. Yes. So let me share the screen and go there. So
Okay.
here was like some examples that I mentioned, but first of all, I'm going to start with the main one. Here's like the top real world assets by market, like CoinGecko, but actually here, like MakerDAO is not in. Okay, MakerDAO actually it's the main protocol for a decentralized like stablecoin that it's called DAI. So what's DAI? Actually, DAI it's algorithmic stablecoin. So it has like a basket of goods that like issuing token or removing token, actually it gets a stable price close to one. Here, for example, we can see like the chart, and it's usually very close to one, so you make it stable. So actually, why then it's related to real world assets? It's because of the basket of goods that actually it's backing that stable coin. And here we can see actually the MakerDAO like summary. about the real world assets that has collateral in MakerDAO. So here we see that actually it's like
so
by
these are
other
the
stable
basket
coins.
of goods.
Mhm.
These are the basket
Yes.
of goods
So
you're referring to? Okay.
yes. So actually, the basket of good, what I'm meaning is like you can stake in MakerDAO your ETH or other real world assets or other stablecoins that are backed by USDC. You can earn like it's the same as if you were like putting your money in the bank account. So actually, you can deposit your money there and you get some interest. And actually that is what it's incentivizing people to do it, so you can be like providing that liquidity, getting interest for holding that assets. So actually here's like the real world asset collateral in MakerDAO, and you can see actually like a list juice log of companies actually. Yes, so here you have like the collaterals. Actually here is like MakerDAO position itself, like world asset sector. It has like MakerDAO has like you can see actually the market cap of like MakerDAO. It's like 2.5 billion, more than 2.5 billion. But also what it's very important is that MakerDAO achieved to be like the third biggest project in TVL, that it's total value locked. And actually the total value lock actually means like the quantity of goods that were staked backing actually the DAI price. So I think that it's quite relevant. And that will be just like an example of stablecoin or like USDC backed project. Another example that actually I think is more visual is like Park, that actually it's a synthetic housing market.
Parcl, by the way. I think it's pronounced Parcl, like parcel of
Mm-hmm.
land. Yeah.
Okay.
Parcl. The name, yeah.
Parcel. Yeah.
Parcl, yeah.
Sorry,
Oh, good.
it's just a Park so it's kind
Yeah.
of parked out. Okay, Parcel.
Yeah.
Thank you, Lam. Parcel actually it's a synthetic housing market. So what it does, it emulates like other housing markets, and people can bet or can invest in depending if they think like the price in that housing market is going to go up or they are going to go down. And it works actually like again like with liquidity providers that are people who are, it's in Solana by the way, this project. The other it's a EVM project, and actually like it just indexes. So here it's the documentation that it's always good to check, so you can like do your own research and learn a little bit more about what project is doing what. And here actually I'm in the app, so you can see like you can become a liquidity provider just staking maybe Solana, or you can trade in the market. And here you can see like different markets that are synthetic markets. So it's not like they have the assets, they bought the assets and they put in the market. It's just emulating or copying the pattern that is happening there. So you can see the markets that actually are going up are going down. So that allow people.
Do you know what the let's pick San Francisco. It says right there $927. What does that represent? $927.
Yes, that's the market price. Okay, I guess it's the square meter.
I think it's square feet. This is USA, so probably
Square
feet.
feet.
Yeah.
It's true. My European, it was pretty cheap then for a square meter.
Yeah, it is USA, so square feet.
Price, yes, it's a square feet. So here it's like the price for a square feet, and you can check like if it's going up or down, and actually give you access with lower capitals to the to real estate. That actually real estate, it's very liquid, it's difficult to access, it has a lot of taxes, a lot of paperwork in the middle, plus you need like a very big entry point, so it's hard to enter for many people. And one thing also very important in the housing market is that it's like the biggest world asset that exists.
Yeah, that is true.
Yeah, so the total value in actually real estate, it's the biggest one in the world. Yeah.
One thing I just want to add is that you, when you buy a thing on Parcl, you don't actually own the piece of land on there.
Yeah.
It's actually more like a perpetual trading, but
yes,
it's more like
perpetual trading.
Perpetual trading. So you put long or short and that amount, and then you earn the respective amount, whether you know if the price go up, you bet long, you win money. If you go long, but price went down, you lose money. That's it, as simple. Then you can do leverage, but I don't advocate for leverage. It sounds very dangerous. So
Definitely.
anyway,
So actually, Lam, what are you going to introduce us? What projects do you have?
So let me share my screen here about our final project that we want to share with you guys. It is Goldfinch. It is a very innovative company that I'm actually quite impressed by what they've been able to do. So short thing about Goldfinch. Goldfinch is basically it's a Web3 company, first of all. They are providing loans through these groups of people called the backers, okay? And the backers basically they guarantee that the assets and the operation of, let's say, fintech and fintech company and small and medium enterprises in the real world, okay? So they guarantee that these people will actually pay back the money by so the backer will basically in turn put this thing on chain and then give the opportunities for people to participate in this. So and then for the borrowers, right? From the borrowers, obviously they need the liquidity for their day-to-day operation. So a very simple example in real life that people can probably relate to. Let's say in a developing country like Kenya, Uganda, Nigeria, people need money to buy a motorcycle for the Uber business or whatever. But then you have to pay it over a period of 2 or 3 years, right, with some interest. That's why this is like micro, I guess you can call it like micro type of lending businesses. And then they would pay back these lending businesses, right, for month over month with some interest rate. But these lending businesses, they need to have the capital. And where does that capital come from? It comes from Goldfinch, right? So it's been backed by another company called Backers, and these are in turn go to the backing company, and all of these would be on chain. But some of the nice thing about Goldfinch, I would say, is one is that it's like 95% uncorrelated with the crypto asset market, which is really good because it's about real assets here. That's most of them. That's where the yield is coming from, right? So actually, there's a meaning behind this yield. People vote on the forums, they make the decision, and then decide on the percentage. So these percentages don't come out of nowhere, right? So usually in crypto we see percentage that doesn't have an explanation. This one have explanation, and I think it makes sense. So you can see some of the past deals here that have been happening, right? African innovation with 17%, carbon reduction fintech to Goldfinch senior pool. So I guess the higher the percentage, the higher the riskier the business. And let's go over this would be
Yes,
go for it.
who chooses and how is chosen where the money is invested in? Anyone can make a proposal, or it's Goldfish, the ones that make the proposal.
So it is a community right now. It's a community base. So they have already they have the coin. Yeah, it's called the Goldfinch coin, which I was gonna
Mm-hmm.
maybe introduce it right now. But this is a coin which is also mean the governance token. What people can
Mm-hmm.
do is they can vote on. People can create a proposal and vote a proposal on. Let's say, hey, I want to help these type of businesses, right? To with the fintech. Usually, again, it's like fintech and lending businesses. So those are like the borrowers. You can think of these like the borrowers, right? And then the lenders would be like people on in crypto like us, maybe with like small investor or we big investor, whoever else, right? So lending money, depositing money in order to get the yield from there, and then getting that. So people who hold the Goldfinch token can vote on the protocol, and then they would it will be voted on. I think they have quadratic voting, basically just to reduce the impact of whales in there, which make it fairer so that whale don't just take over, right? Um, yeah, I hope that's clear.
Yes.
So going back to the important statistic here that I have, active loans right now 76 million, and these are all like real world business that are actually happening. So these are the money I would say, like, consider when I think of this is the money right now been circulating in the real world offline, right? So they have an off ramp mechanism as well. So after these people businesses, they of course they have to take the USDC loan and then they have to off ramp it somewhere, right? And then do it for their businesses. And so far they've only been losing the last loan that I have been write off, it took 75%, which is quite small, I would say, compared to other lending businesses in Web2. And loans prepaid, so far have been 52 million, so they're doing quite well, and 8%, and looks like the range is anywhere from 8 to 5 to 20% from what my quick look. And the token seems to be doing somewhat well. It's increased 12% in the last 24 hours, but it has went down since release. I don't know why. Crypto. Anyway, so 150 million is the market cap right now. I mean, if we expect it to go back to the previous high point of $10, and it would be 5x, and I guess that's probably possible. Anyway, not financial advice. So with that said, I think that's a real world asset topic we want to share with you guys today. So Raigal, do you want to share with the listener what we're gonna discuss next?
Yes, actually, now, like in this episode, we have introduced like a few projects, and we have mentioned the word like do your own research. So actually, like in the next episode, we are going to show you guys like actually how we personally do our own research when we are interested in a project, or we want to invest in a project, or we want to use the project technology. So Lam and me, we are going to analyze personally one project of our election on its own from zero.
Yes, so I think that's what we're going to do next time. We're basically going to review our own secret formula to share with you guys how we actually do research before we consider buying or aping. But most of the time I would say buying, not aping. Yeah, buying, because we actually do proper research into some new tokens. So with that said, thank you for listening, everyone. It's been awesome, and looking forward to see you next time. Yeah.
See you.